Today on the Rebel's Edge, we are going to hit a stock that's an old school stock that's getting boosted by AI, and I'll bet you never knew that. Oh, and there was unusual option activity just a week ago. Giddy up. Welcome to the Rebel's Edge. I got my man with us, and I got to tell everybody a little something. He got a little bit of a boost not too long ago, Marc LoPresti. He is now the CEO of Market Rebellion and doing an outstanding job, Marc. Appreciate it. I know it's probably more time than you even expected, but it's great to have you on board.
Well, it's been a pleasure. It's been a wild ride so far, and I'm looking forward to continuing to improve our customer experience, make our content even better, harder hitting, if that's even possible, and maybe implementing a mandatory shirt policy for certain people that come on the show from time to time from the Caribbean. But big changes in the offing, Pete, and they're all good, they're all positive, and it really is an honor to work not only with you and the incredible Market Rebellion team, but our Rebel Nation. That is, of course, how I refer to our audience, our subscribers, our followers. We wouldn't have a company without you, and we love you.
Yeah, we got some great people and great people working for us. A lot of great people who are signed up for it. You're right, Rebel Nation. I put that on most every tweet that I'm talking about anything in the markets. I put that hashtag and I'll get the Rebel Nation on there. Marc, it's also interesting because of the shirt comment. It ain't me, but it's a guy who looks a hell of a lot like me. I just try to pull those reins in, and Jared will back me up on this, by the way.
Yeah, I know the feeling. You know, there's some leopards whose spots you can never change, but that's besides the point. We just want to see less of the spots. That's really what this is about.
A lot less. Anyway, all right. So we're going to jump into the macro minute. It is 1 minute, and I'm going to lead it off. CPI and Jamie Dimon. And CPI came in a little bit hotter than people probably expected. That also on top of what Jamie Dimon's been talking about, which has been, hey, look, we aren't ready to start cutting. As a matter of fact, I think in June, he said, I think in June, we shouldn't cut. And that's the next time that they're expecting to cut. It's about 57% right now, Marc, that they're going to cut 0.25%. But he is saying absolutely not. Don't do it. But that's my macro minute. What about you?
Yeah, I mean, look, the street so far celebrating this morning's CPI numbers a little hotter than expected, but not hot enough to upset traders and investors. That sort of good news, bad news trend continuing. And look, you know, I think that there is a lot of reset of expectation here. We've thought originally 75 basis points, 3 cuts this year. We've scaled that back now to 50 basis points. 2 cuts this year. Maybe they skip in June. I'm starting to think they're going to skip in June. We're nowhere near the Fed's 2% target. And look, things are still getting more expensive. And we saw in this report, food, eggs, FCOJ, even if you take, fuel and housing costs out of the picture, inflation has not gone away.
I totally agree with you. How about the fantastic futures? And I know we've got our
fantastic futures.
Marc, I've talked about this before. I'm going to talk about it again because it's, again, hitting all-time highs, and that's cocoa. And for the people who don't really follow this, there's a lot of different reasons for it right now. Demand certainly is high because it's not just chocolate and sweets. It's also in medicine. But on top of that, how about the weather issues? What's going on in Africa and some of the rains and all this? It's causing a lot of difficulty for them at this point in time, which is pushing those prices to the upside. This is absolutely ripping. 1 year, Marc, up 160%. Year to date, up 65% for cocoa. These are big moves.
Yeah, no doubt. And look, I'm not an expert on cocoa futures, so I'll just point out for our viewers, if you're into futures, this is one of those assets that you can get a little advanced smart money information. Follow the weather, right? We talk a lot about El Nino effect and things of that nature. This is one that you probably could have had some insight into how it's affecting that supply-demand picture and anticipated to some degree the surge in price in cocoa. Do your homework, folks. It pays off.
Absolutely. All right, let's just jump into our 4 stocks that we're going to talk about today. And I'm going to focus on the one that I teased in the opening there, Oracle. Now, Oracle is absolutely ripping to the upside, Marc. A lot of different stocks in the NASDAQ, a lot of tech names, but Oracle, old school, right? What do they have to do with AI? Well, AI is boosting the demand for their cloud computing. That's what. And when you look at their numbers and you look at the earnings, which they beat, they didn't necessarily crush it, but they did beat pretty strong. The infrastructure side of cloud, all the different factors that go into it. This is a stock, Mark, that why isn't this in the Magnificent Seven? Because I've turned it into the Magnificent Four, by the way, because I think you lost 3 in a big way. So I think this is a name, if you want to add and you want to get to 7, how about Oracle? It's hitting 52-week highs today. It's absolutely ripping to the upside. It traded 3 times a full day's amount of shares in the first 90 minutes of the day. This is a stock that's on fire, and people are starting to realize, hey, maybe there's even more upside. We did have unusual options in there as well, Mark. We had some big buyers in there. You can see it on the screen there, the March 113 calls. Well, with the stock at 127, 128, 129, wherever it is right now, those calls absolutely exploded today. So the unusual option activity, bang, it struck again.
Yeah, look, I don't have a whole lot to add, Pete, other than to maybe take a slight victory lap, okay? Because anybody watching in Q3, Q4 of last year, or really anytime we talk about data, anytime we talk about AI, loyal viewers will remember something I say every freaking time. Do not bet against the growth in demand for data, particularly B2B, particularly the picks and shovels of the AI industry. And this, Oracle, sort of the Oldsmobile, if you will. This is like your dad's or your granddad's AI stock, right? How is Oracle an AI stock? But yeah, it is, right? And you don't have to try picking winners. Who's going to come out with the next best chat GPT, the next AI large language model? That's all cool. But you cannot, and the market has yet to fully comprehend or price in, which is why stuff like this will go higher. I said it here, will continue to go higher because the market has yet to price in the total demand picture for infrastructure, for compute and cloud driven by AI. We talked about it when it comes to NVIDIA last year. We talked about it ARM. Remember when ARM went public last year? And Kramer and others would say, you can't possibly justify the PE on this stock. Where did ARM go? And I put a bull call on that one, Pete, that day. What has ARM done since that IPO? What has NVIDIA done since that IPO? Don't bet against data, folks.
Right. Absolutely, Mark. I think you're 100% spot on. And it's great because people do remember that stuff and they'll go back and look and they'll say, he's right. All right. How about this one? On Holding. Now, it's athletic wear. Everybody sees them. Those shoes and clothes are absolutely everywhere, primarily shoes. I see them on everybody. The one issue that they did run into, though, Mark, and they've done very, very well. This is a company that's kind of crushing it on almost all fronts, but their earnings are a little bit strange and make you scratch your head a little bit. They're looking for 11 cents. They actually lost 6 cents. They made 2 cents a year ago. This is a stock that was on the mend. It was doing the right thing. They've done a lot of things right. But today, that stock's getting beat up, and I think it's all based upon what that earnings number was. Because if you look across at just about everything else, it looks pretty solid to me. But it's also a stock that has taken off pretty nicely, and I think cooling off a little bit to the downside. Maybe it was time.
Yeah, listen, I mean, people don't like to see that kind of volatility and inconsistency in earnings, whether to the upside or the downside. So that's definitely giving traders pause. I think the other piece to the story, Pete, is where consumers are spending their money, right? This comes into the CPI and the PCE prints that we've been talking about today and last week. Consumers continue to point their spending, their dry powder or whatever credit they have left towards services, experiences, not discretionary goods. This type of athletic wear that this company makes is in that discretionary goods category. There's no doubt about it. My one question for these guys, depending on how hard it gets beat by the end of the day today, or beat up, I should say, will they benefit, as all of these sportswear companies do, from that seasonality, that seasonal bump? It's beautiful out here in New York today, and that makes people want to go out, buy new running shoes, buy new pants, workout gear, that kind of thing. They should see a benefit from that seasonal bump that happens at this time of year. But we'll see. I got to see it where the thing closes. It is on quite a downward spiral.
Yeah, and I'd also like to see, and I'd like to see, Mark, also, there's huge short interest in here. 10 to 12% of the stock is short interest. So with that, will there be some covering now? Because this is a stock, when you really look at all the other numbers, like I said, they look pretty positive. It was just the earnings itself that was something that did stand out. By the way, we did have puts that they were buying in here as well. They're buying the 33 puts. They went from $1.50 to $4. That doesn't sound so bad. But we have that unusual option activity all the time here on Market Rebellion at the sites. We've got the UOA, and we've got these great folks that all work hard for us. Take a look sometime when you get a chance, because that's what we do for a living. We love it. And the unusual is what kind of leads us in a lot of trades oftentimes. So very, very interesting to see both that and Oracle in the right directions. One going up, one going down. Acadia Pharmaceutical. Now, this one's pretty interesting, Mark, because I point out all the time to people, when you're looking at biotech stocks and you've got a phase one, you really shouldn't buy into it too much, because it's still a long ways before you get through the entire process, and you've got to go and get that approval. But it starts at phase one, then it goes to phase two, then it goes to phase three. Now, this is a company that was in phase three for schizophrenia drug, but the problem is they couldn't even do it as well as the
placebo.
Placebo, yeah, and that's a big problem. If you're not beating out the placebo, you've got a bit of an issue. So they've actually said, nada, we're done. We're not even going to go any further. Now, this is a phase three drug. You'd think with all the money and time that they put into this, that they'd want to see this through, but they're saying, you know what? They put up their hands and said no. Now, they've got a couple of different pharmaceutical names that are already out there and making money for them. So because of that, you look at the balance sheet actually looks pretty solid. But you've got to look at that pipeline, and the pipeline is not huge going forward. So we'll see how well they can do if they can bounce back.
Yeah, listen, I tend to avoid playing these clinical trial bets, right? They tend to be very binary. It either works or it doesn't. This is a great example of it didn't work. The placebo did better. Maybe that's part of why the demand for cocoa is going where it is, because maybe chocolate makes you feel better than whatever the hell this drug was. But it's one of the reasons why I don't bet on those names. I don't like binary outcomes, Pete. I just don't.
Yeah, and I think people just have to keep that in mind. The drug is not officially there until you get through this whole process. It's great to see it. It's great to know that it's there because it's a possibility. But to put all your money into something like that, just kind of working yourself that way, I agree with you. I don't think you want to do that. All right, Southwest is our next one. Now, Southwest has got some issues, and what do their issues have to do with? Another big name out there. How about Boeing? The effects of what's been going on with Boeing, and we've seen it, Mark. That's a stock that has cascaded to the downside. We've had all kinds of put activity, including today, put activity in Boeing, expecting even further losses. The problem now for Southwest is they're going to have a shortage of planes. They had their orders in. They needed to do that. And now that's going to get cut by about 50% or more. That's going to be a real problem for Southwest going forward. That's a name that's under pressure. And I don't think it's a name that, because of this pressure, is it overdone? Probably not. This is something that's going to last probably at least a couple of quarters, I would think, for people to start seeing maybe what the future could be, and obviously looking at Boeing to see what is that future.
Yeah, Pete, listen, this is less a Southwest story, although that is an airline that deserves the beleaguered adjective, because it is a beleaguered airline. I think the only one that's as beleaguered is the big yellow Tweety Bird airline, Spirit, which I occasionally have to frequent because they fly routes at last minute, but that's a whole other conversation. Yeah, this is a Boeing story, and man, I don't know how the Boeing story can possibly get worse. There was another potential accident yesterday, and look, this all comes down to what has been a slow and steady decline in quality control at Boeing. There's just no two ways about it. There was actually a very interesting last week tonight that y'all can pick up on YouTube about sort of what's really been going on at Boeing. Our friend John Oliver over there, we may not agree with all of his political views, but the man does some pretty good investigative journalism. And Boeing is in free fall, which is a terrible thing to talk about an airline manufacturer. But I think for traders, and the insight here is we're going to see as how reduction in supply and availability of aircraft, because you only got a couple. You don't have that many people making passenger airlines out there. There's really only two, right?
Yeah.
Boeing being one of them.
Duopoly.
That's exactly right. That's an SAT word. Thank you, Pete. How this is going to start to impact aircraft or airline earnings, I think it has to this may be the canary in the coal mine about how Boeing's troubles are going to be impacting commercial airlines.
Yeah, I do not disagree with you on that at all. I think this is a bigger problem than people think. And obviously, some of these videos that people have seen over the last few months and maybe even years, it's definitely something that's on a lot of people's mind, I think, and that could affect things in a big way. All right, Marc, how about a little bit of sports? It's always fun. We jump to some sports. I know you were an athlete too. Don't hide this whole thing from us. You were an athlete as well. But before we start with this, the free agents and some of the craziness, and I got a question or two for you. We got a great video here that John sent to us, and we just got to play it because it's amazing. How about that contract, Marc? What do you think? Baker Mayfield made $4 million last year. Now he's going to get $100 million 3 years. Not bad. Not bad.
Is he moving to Florida?
Yes.
Yeah.
I mean, when you look at these numbers as they roll across, and it's the Chicago Bears, and it's the Browns, and it's the Buccaneers, and the Vikings, and Atlanta, there's a lot. Russell Wilson. The Russell Wilson we talked about yesterday, but we'll visit for 1 second. How about this, Marc? Can you imagine he's getting paid $38 million from Denver Broncos to leave and gets $1.2 million at his new destination with the Steelers? Is that amazing or what? I mean, we talked about that trade long ago, and it was amazing at the time. It was the most ridiculous I've seen. There's always going to be another one because the Herschel Walker trade still is something everybody talks about in life or whatever. But this trade, I think, makes that actually look not that bad. But
look, to me, Pete, it's a business story too, right? And I'll just touch on this really, really briefly. Football is the biggest draw for live television right now.
Yeah.
It really is, hands down. Everything else I can watch later. I can watch on my iPhone. I can YouTube it, this, the other thing. Pro football and college, the entertainment value, even taking the Swift effect out, and we're not even going to go there on this show, but that is part of what is driving these numbers in the players' contracts. These guys are not only the best, some of the best athletes that you can watch, but this is must-see live TV, and that's why these numbers are going where they are.
Well, and last year, 97 of the top 100 views were the
That's
NFL.
Right.
Yeah, I mean,
Right.
and on top of that, we talked about this about a week or so ago, John and I, but the cap space has moved another $30 million, which absolutely incredible, Marc, because of the fact that it's the biggest jump it's ever made. It gives them the opportunity to pay the athletes what they're paying them. You saw some of those numbers; they're ridiculous. So I'll ask you this: for you, because you're not just a former athlete, but a fan as well, just like all of us are at this point. Once you're past about 30 years old, but I know your team
for yourself, Pete. I'm still up now.
But when you look around the NFL and everybody's got their teams, right? I mean, for me, I kind of am split because I played for a couple teams, and so I have, I like the Vikings, I like the Buccaneers, I like the Raiders. I have a sense of what I like for them and I would like to see them do.
Right.
The Vikings lost Kirk Cousins to a 4-year, $180 million deal to the Atlanta Falcons. The Vikings don't have a quarterback on the roster, really. They did just pick up Sam Darnold. But let's be honest, that's a guy who was a high-round pick who didn't do very much. So I guess the question I got for you, are you more Giants or Jets, would you say?
Well, listen, I'm very concerned about what our local hero Jets look like for this year with the Saquon Barkley movement. I mean, I don't know what they look like. I think the team's absolutely gutted at this point. Obviously, lots to see with what plays out in the draft, but I'd be very concerned as it stands right now in terms of what their bench looks like for the upcoming season.
Yeah, it's interesting to look around and you see the teams that are really willing to spend money right now and the teams that are kind of waiting. And
he went to the Eagles, if I remember correctly.
Yes,
3-year contract with the Eagles. Yeah,
that's a little bit scary, right? And he was basically called out on social media because they feel like he's stabbing him in the back because you're leaving, the Giants to go to the Eagles, and those are kind of bitter rivals. So, a lot of people are not very happy about that. Matter of fact, One of them was Barber, their old running back. He's like, hey, man, this guy's dead to me. He really said that. I mean, let a guy go where he's going to go, man. I mean, and he's coming off an injury. They gave him a lot of money, which is a little bit shocking and a little bit controversial, the whole thing. But it is interesting just to see it, Marc, how these GMs are going to have to navigate through all of this to figure out the best way to build their team. And right now, the Minnesota Vikings started on defense. That was a good place to start. And the Tampa Bay Buccaneers started on offense. Another good place for them to start. They had the defense. They just needed some of that. So
Pete, can I ask you a question?
Yeah.
I got a question for you. And this sounds like something that the SEC would be outlawing if we were still talking about trading. What the hell is legal tampering in the context of the draft process?
That's a great question. Basically, what they're doing is they're allowing you to have the conversations before Wednesday at 4 p.m., right? And you'd say, well, why is that? I think it's just to get the ducks in a row in terms of numbers, because you and I both know dealing right at that time frame and trying to figure out the numbers. It's still a game where somebody else could step in and they could, maybe bid it up a little bit higher. But I think it's just it's a way to make the process a little bit smoother is the only way I could say it. And I think it actually works. They've been doing it for many, many years now, but it's a really good question nonetheless.
Is this where a lot of the deals get made though? Is this like an observed or not covered part of the draft? I mean, I remember I was covering the NFL draft with Battlefin, our data company, a few years ago, and we were trying to apply alternative data to the draft and trying to see how the outcome. We actually did pretty good from a statistical perspective, but this was a new concept to me, and it sounds like this is where the deals really get made, and it's not so much on the day of.
Right. You're right. I mean, the actual signing's the day of, but for now, they're doing what they're doing. So it's a whole process, and I think it's gone pretty smooth over all these years. I don't think I've never heard of anything negative coming out of it. I've always, because they all kind of do it, right? So if they start getting negative about it, then they're going to put themselves in their own bind as well. Right. All right. So I got one other, and this fits right into what you were saying. As far as the NFL draft, let's say you and I are the GM of a team. So let's say the team is the Chicago Bears. John and I were talking about this a little yesterday. I wanted to go into this with you as well. So you've got the number 1 pick and you've got the number 9 pick in the draft, right? So do you stick with the number 1 and take what most people say is the sure thing? And believe me when I say this, Marc, there is no sure thing. But do you take the sure thing at quarterback Caleb Williams with the number 1 pick, or do you trade that away? And just remember, what if it's Joe Montana? What if it's Tom Brady? What if it's whomever you want to throw out there, and everybody for the rest of your life says, you really blew it? But for my money, I will tell you first, I would trade it. I would trade it. I would pick as many great picks as I can in the first and second round on 2024, 2025, do all of that. John and I were talking about that yesterday. I just don't want the risk of even having that first. I mean, by having that pick, if you take the wrong guy, last year it happened down there in Carolina, right? So what do you think? If you were the GM, I mean, you're a new CEO here, but if you're a GM, how would you handle it?
I'd take the trade.
Yeah.
I got to agree with you. And everything that I read on this today seems to indicate that that's what they're going to do. It's never a sure thing. As you pointed out, we won't know till it happens, but that's my guess.
And I'm one of the few people out there, apparently, who actually thinks the quarterback they've got is damn good. There was a reason he was a high-round pick, and there's also a reason why he struggled, because they didn't have much of a team, Marc. I mean, when you get those high-round picks, or the first couple of picks in the draft, it's normally, sometimes it's a trade. This is a trade, by the way, from Carolina. But a lot of the time it has to do with how bad you played the previous year. So there's a lot to it. So it's usually not just a one player away. You usually need a lot of players. So I agree with you. I think some of these trades make so much sense for the Bears. And be careful of the Bears, the Packers, who just picked up Jacobs at running back. The Vikings have built a defense. Detroit is a player or two away. That whole NFC North is getting pretty amazing, I think, in this free agency time. And when the draft comes around, even better. So it should be pretty fun.
This is all part of the reason why the NFL draft is also one of the most highly rated television viewing experiences, close to the Super Bowl. Also something I did not know, watched by millions and millions of people. More must-see TV.
It's unreal. It really is. Well, Marc, thanks for joining us today. I know we're going to see you another day this week. It's going to be exciting again. Oh, on Thursday. Look forward to it. That way we get to close into the weekend and get this week finished and move on. That'll be a lot of fun. I look forward to that, Marc. That's going to be great. Folks, join us tomorrow, 1 p.m. It sounds like John's back tomorrow. You never know. The guy's on some ship somewhere. He was talking about it the other day. I didn't like when he was saying, well, it's about the size of the Titanic. I think when you're on a ship like that, you probably don't want to use the word Titanic ever.
Yeah.
But anyway.
We'll see if the shirt mandate takes. I'm not optimistic given that he's on a cruise ship in the Caribbean.
Please have sleeves on the daggone thing. All right, folks, have a great day. We'll see you tomorrow at 1 p.m.